My kids are real excited.
Good. Okay, I want to welcome everybody. Unconventional Wisdom, the CSE Investment Podcast. Here we are. It's another Thursday. And there goes our signed bells over there ringing. 10 a.m. Central Time. We have Joni on here. Dirk will be here shortly. We have Randy. We have Keith. Cezanne has his internet problem. And we have, of course, Marcus, our engineer. And we have John. Hold on just a second. Let's cough again. Excuse me. I don't know why I eat those almonds right before this show every single time.
Did you really eat some nuts before the show?
I had about a little small handful of almonds about right when you called me. Cannot believe I do that. Anyhow, we have some good things to cover today. You my continuing. Well, first, this is interesting. Walgreens. This just came out. Walgreens, CVS, and Rite Aid lost $12 billion in value. I think yesterday Amazon announced they were buying a pharmacy pill pack, and Amazon just keeps still disrupting the market. But that's huge. $12 billion they lost in value because they think that Amazon will be able to. What the thing is, they can deliver prescription drugs to homes. And I think that's a big deal because that's what Walgreens, CVS, and Rite Aid, that's their main people that walk in the front door. They've already lost their customers that buy little things between the front door and the back of the pharmacy to Amazon and other online retailers already. So that's huge. In my continuing to understand how Wells Fargo stays in business, this is the bank that Janet Yellen, the former head of the Fed, said that was a criminal conspiracy, criminal organization. Well, here's the article leader. This article out of Wall Street. Wells Fargo leadership team misses the mark again. I mean, these people can't do anything right, and I've got a prime example of it. I took a photo of it. I'm going to show you at the very end. It says, even when they're trying their best, it seems the Wells Fargo leadership team can't help but miss the mark. And so this isn't for lack of trying or taking on a new project. Wells Fargo has launched a new advertising campaign to refurbish the company's public image. It's considering a major restructuring of its wealth management division and recently unveiled plans to offer clients a way to opt out for broker protocol. Now, this is the broker protocol thing where you're supposed to be put your client first. So they want to opt out of that. No, it's actually these initiatives that's created new pain points for advisors. So they're having a terrible situation with their advisors. In other words, their brokers and their wealth management. A good example before their latest fiasco. Wells Fargo losses amount over 80 brokers with $12.5 billion in assets under management have left and gone to other brokers or most of them created their own firms. That's what I've been talking about forever. Forever I've been talking about this, and you see it happening. But this is their latest deal. Now remember, these people are under scrutiny. And the reason I bring this up, it just shows the average person on the street doesn't care about that. They're going to go in there and use their ATM card. They're going to cash a check. They're going to do it. It doesn't make any difference that they're so bad. So bad. Anyhow, this latest one is Wells Fargo will pay more than $5.1 million. This is cheap for them. Usually it's in the billions to settle SEC charges claiming employees pushed clients to sell complex financial products that led to substantial fees and reduced returns for investors. Wells Fargo advisors improperly encouraged clients to actively trade products in the market-linked investments, which were meant to be held to maturity. According to the SEC, although the wirehouse had an internal guidance policy that prohibited short-term trading or flipping of MLIs, advisors routinely recommended clients cash in their holdings and use the profits to purchase new ones, the regulators say. Can you believe that? I mean, they're just one thing after another, but here's the big deal. This is my forensic, Marcus, this is my forensic activity for the week. My wife and I are over at a barbecue place, which is across the street from Wells Fargo Tower. Wells Fargo does not own that tower, but their name is on it. and we're at an outside cafe. It's Risky's. Joni knows where Risky's is. Marcus knows where Risky's is. And I look up, and I see the scaffolding. And I've got a picture of it. I'm going to hold it up, and you may be able to see it, maybe you can't, but here it is. I don't know if you can see it. Can you see that scaffolding? Wells Fargo, over their sign on the building. Now, again, they're a major tenant in the building. They do not own the building. And I look up and I'm thinking, oh my goodness, something's finally beginning to happen. They're taking down the Wells Fargo sign. The building owner doesn't even want Wells Fargo, the crummy little bank's name on the building. Well, I sat there, and before I finished my barbecue, I look up, and all they're doing is just cleaning the sign. They're not taking it down. They're just cleaning it. So I figured this directive came from the biggest honchos at Wells Fargo Tower or Wells Fargo Bank, because they're so notoriously bad about correcting anything else. They probably figure that they're cleaning up their image just by cleaning off the sign. So that's the latest on Wells Fargo. Okay. Anybody have any comment? Do any of you guys use Wells Fargo? Okay. Not even you, John. Okay. Keith, how's your week going?
Oh, had a great week. Finally opened a CMIC last Thursday and closed it out on Friday for a 3% gain. And given what the market's done since then, boy, am I glad to have been out for a 3% gain. So it
had to have been absolutely incredible, just incredibly wild.
It's crazy. Just when you think it's going to go one way, it goes the other way. It just doesn't make any sense. But anyway, so 3% last week. I normally don't do one this week going into next week because we're at the quarter boundary, and it can be pretty volatile on a credit spread going into the quarter boundary with portfolios rebalancing, and plus that 4th of July week is just a couple of times has eaten me alive, and so I just don't try not to trade on credit spreads that week.
Typically, what's the least amount of money does it take to get into a CP like you're doing?
The CMIC I'm doing right now is $1,000 per contract.
Can you do just one contract?
Yeah, sure.
Okay, so
Absolutely.
this falls right into what I talk about Joni and Cezanne doing all the time, and I'm getting a lot of press to it lately about the 1% per week, you know? And here you made 3% in 1 week, and you typically make more than 1% a week. And it's the same thing. That 1%, or $1,000, which would buy CMIC, right? And if you just make 1% in 10 years, you're going to do $176,650, $176,650.29. But in 15 years, you're going to be $2,347,000. If you just made 1%, not 3, but 1, can you imagine what would happen if you made 2 or 3? Just all the time. So it's pretty incredible stuff. Pretty incredible stuff what you're doing, and it gives people a totally different investment vehicle. It's not as fast as Joni and Cezanne's. It's a little different than Randy's traditional covered calls, and of course then John with his primarily micro moment trading and momentum trading, I think. But it's interesting too during Cezanne and Joni's seminar today. And now, don't forget, I talk about this all the time. $1,000, and you never invest another penny for the rest of your life. If you make 1%, just 1% a week, doing any of our techniques, it's astronomical amounts of money. 1% a week. And Cezanne and Joni this week have done 5.8%. Cezanne 3.3%, I think, on Monday. Joni 2.5% with QQQ today. Cezanne's was with Apple. Typically, they do something every week. Very seldom do they have a loss. Even if they had a loss, it's not going to be more than 2%. But right here, they made 5.8% for the week. Now, using my technique here of $1,000 a week or $1,000 one time, and then just trade it each week for 1%, you could now lay off 4 weeks, and you still have room. You've made your money, and you can lay off and do nothing. If you don't want to spend the 15 or 20 seconds it takes to do one of their deals, then you don't have to do it. But those are just incredible numbers, and but people have a tough time understanding how simple life can be and how quick they can be. They want to make it involved and complicated. I think that you have to invest lots of money. John, I'm going to let you talk about your reformation.
Well, I just followed the rules this week and didn't get greedy, looked at the charts, got in when it was supposed to be a good point to get in and followed it up. As I mentioned, the greed can sneak up behind you and bite you. So try not to let this thing roll all day, even though several hours later you might look up and say, wow, I could have tripled or quadrupled those results. But you just take what you can get and sit with it. You know, not every time do the Cubs plan on getting up there for a grand slam. They just try to get a man on base or maybe even a double off the wall, something like that. So you just have to be patient and follow the rules.
Well, absolutely. Kind of go over those returns, what you made this week.
Well, right after the webinar last week, I managed to get about 12.18%. That only took about just 3 minutes, but I got into puts last week. So Thursday, excuse me, and then Monday also I got into 2 of those. It just looked too good later in the day. So 10% on the Monday first one, and then 15, a little over 15 later. Those are about 15 to 20 cents on say $1.75, $1.50 option, something like that. So I typically trade about 50 of those options. So they may be a little rich for some folks. Maybe that's just chicken feed to others. I'm not sure. But my goal is to try to make about $1,000 a day if I can. And if that happens 2 or 3 or 4 times a week, that's a pretty good income for most people, I would think. And I'm just trying to keep from having to take away from my pile of nuts back at the cave there where my retirement money is, and eventually try to take that over myself.
Well, I think the key here is the leverage that all of y'all achieved. Keith on his, and Cezanne and Joni on theirs and yours. The leverage is just astronomical. In other words, you're not pumping in thousands upon thousands upon thousands of dollars to do these trades. You don't have to. Right. You know, like I say, $1,000, one-time investment for $1,000. If it was 10,000, think how much more someone would make. But that's the key. Keith, what's the leverage on? What do you think the leverage is on your CMEX?
Not quite certain what you mean there on that, Joe.
The leverage, like when somebody invests $1 or $1,000, what kind of leverage are they getting, if any? I don't know. I'm not that familiar with it, I guess. It's what?
Well, it'd be just 3% on the $1,000 that you're getting on the return on. So
okay,
yeah.
And, but you're controlling assets out there much more than $1,000, I would think. I know John is. He's controlling. He spends $1,000 or he spends $1,000, $10,000, whatever, on one of those trade the moment, micro moment trades. He's controlling much more total value. He's got some calls that represent so many shares of a stock.
Oh, well, yeah. In my case, though, the $1,000 is 100 shares of the stock, so
okay.
or the index. But with the spread, you have both the long and the short legs. So pretty much you're controlling 100 shares of SPX when we do that.
Well, and when you do have that leverage, though, it's not your traditional leverage where you're borrowing money from the broker at 50%, 50%, which is a standard. Those are the things that always get you in trouble on traditional covered calls. Because with the way we do them, we never have any leverage. We have incredible leverage, but it's not borrowed money.
That's correct. And we don't do borrowed money on credit spreads either. It's purely, it doesn't cost you anything to get into it. You just have to have the money in your account to cover it for worst case scenarios, if something wacko happens on that.
Yeah. So Joni, how has the week and all this crazy stuff in the market, how's that affected what you and Cezanne have been doing? I know it's difficult to peg Cezanne because she's never anywhere where you think she is, but I think she was up in Omaha, Nebraska, at the Razorback. Evidently, they did very well in baseball this year, and it's the Razorback. They're in the college World Series. Is that what it is, Joni?
Yeah, that's right. Yeah.
I didn't know she was up there. I was talking to her the other day, and where are you? She said, well, in Omaha. I said, what? She said, well, the Razorbacks, and they won today. They won. I think they lost yesterday, but then there's a game tonight. So she's probably out there trading in the diamond, with one of those dig outs or something like that. So what's the difference in the market when it's so erratic? How does that change, if anything, you guys do, because you've had one hell of a week?
Yeah, we've had a good week. It doesn't matter what the market is doing. You just need to be disciplined. It's kind of like what John was talking about earlier. We have a system, we follow rules. So whatever the market presents, if we're following the rules, you get in. If it's not a good situation, you just stay out. So even though it's been volatile and it's been like today, it was hard for me to get into a trade because of what charts presented. But if you follow the rules and do the right things like John does, you get a trade in a week or two.
Yeah, I think that's the key to our technique is that, most people, and I was watching CNBC, which I don't normally watch, but I listen to it for background. I know you like to watch it. And they'll come on there and say, well, the stock went up because somebody said this, somebody said that, somebody said that. And these guys always look so official on CNBC. They got on suits and ties and stuff like that. And they look important. They're probably just got out of McDonald's, for, working. But anyhow, it's all this stuff, well, somebody thinks it, and somebody thinks, and this is going to happen, that's going to happen. It's just all a bunch of bull. All you need are the basic rules. And on all y'all's techniques, you just follow the rules. It doesn't make any difference if they think the market's going to be up or down tomorrow, because whatever it is, you're going to take advantage of it.
That's right. That's exactly right. And I'm glad you bring that up because I'm going to plug our webinar. It's coming up. It's July 9th. And so we have a full day webinar coming up, and we're in the market all day, and we go over the rules, we go over the indicators, we go over our techniques. So if you go to compoundstockearnings.com, you can sign up for our webinar where you can learn to trade regardless of what the market's doing. Up, down, sideways, volatile, it doesn't matter. Our technique works in all circumstances.
Okay, and this weekend also, I'll plug mine. I'll be conducting the 2-day covered call seminar, which is a little different this time. The way I do it, you can actually, instead of just typing in questions and getting an answer, you can actually call in, and as many people as want to can call in, and we'll answer the call. You don't have to call in. You can still by note there, write something in, and I'll address it. But you can also call in, and I think, Joni, you do that on yours. You have that ability too. Also, people can actually call you in while you guys are doing the trading. Is that right? Joni disappeared. Where'd she go? She said she was having an internet problem. Oh well.
Yeah, she seems to have vanished.
Yeah, she vanished. Well, anyhow, you can also, if you attend their seminar, you can also call in. If you want to check out our website, compoundstockearnings.com, go to that site. You can sign up for the Cal Report, which is free. It's been published for 20 years. It comes out every Friday with a Saturday date, and you'll see tons of questions and answers, questions from our clients, answers from everybody you see on this podcast. You can see all kinds of other things of what we do. And you can see our schedules where you can sign up for the various seminars and stuff, and also where you can get free, periods to look at a seminar and look at a trading technique. And that's compoundstockearnings.com, and the Calorie Report is free. And if the website is going to have everything else on there, our schedules, our seminar schedules, all kinds of stuff about compound stock earnings, everything we do. If you want to call in on this seminar, maybe a little late today, but the number is 214-377-1108, 214-377-1108. You can call and we will address your questions or your comments or just listen to you talk. Also, you can send a email to podcast, compoundstockearnings.com, podcast, compoundstockearnings.com. If it's too late today, then do it for next Thursday or send it today and we'll answer it anyhow, and then we'll present it the next Thursday. I'll be going back to Puerto Rico next Saturday, so I'll be speaking in Spanish then for the next several weeks. Dirk, our CEO, is in Puerto Rico as we speak, and he will be coming back on Monday, and then he goes back about a week later or so, he and his family. So, anybody else have any comments? I think we've kind of covered everything. Again, the big thing is this market volatility and how the market volatility doesn't affect what we do. And you don't have to make a lot of trade, and you don't have to sit around all day and do this stuff, because when you do, the worse you get. You start off, and we tell, like Cezanne and Joni, they say, hey, they trade right first thing in the morning. And they're after maybe they spend time positioning, finding, hey, here's the right place on the chart, here's this, here's that. they spend time doing that. But when they do the trade is never more than 15, 16 seconds on average. Never. On average, that's what it is. If it's a successful trade, they're going to be in and out of it that quick. If it's not a successful trade, they're going to be in and out of it that quick. And when I say it's not successful, they're not going to be losing like, 100% or 50%. They're going to be losing 2 or 3%. And they offset that with the earnings on the other trades, as do Brandon, as does Keith. John, we never know. He comes and goes. I think though he's seen the Lord this time. I think John has now seen the light. Is not going to violate the rules. John, you're like a juvenile delinquent, John.
I know it's tough.
Sitting you back and bringing you back again.
Well, it's nice to be on the webinar for the accountability, because I hate to have to get on my knees to face you folks every week if I do something dumb.
I will have John's complete statement since last Thursday, this Thursday on his returns in the Cal report again, because I had his statement when he sinned last time, and this is redemption, the redemption week. So, well, if nobody has anything else, I'll call it for the day, and we appreciate you guys being here. Sorry, Joni got dropped out, but she told us on the front end she was having some internet problems, a lot of storms and stuff. So does anybody have any final comments they want to make?
No.
I just look forward to the July 9th all-day webinar. It's like recurrent training. I mean, there's no amount of skill that you can still pick up something new from watching that. Attending it.
Yep.
I've only missed one since they started doing it due to internet problems. It's always very enjoyable, very educational.
Great.
Something, so.
Thanks for your comments. Keith, anything?
Yep. Nope. Everything.
Okay. Marcus, anything? The blog.
No, nothing. I didn't get in time, but I do have a Wells Fargo account. But I have a couple of mortgages. I mean, it's like they have me, but they have me.
Well, check your paperwork.
I know. It's like they just. What's the latest way that they've scammed? As far as I know, I haven't been one of those people.
They probably paid off one of your mortgages, but charged you a big payoff fee.
Something, yeah. I mean, it's,
and didn't tell you, so you keep making the payments. So they.
I definitely don't trust them. Right? Yeah, but I see no evidence that I was one of the scams. But who knows?
Who knows? Okay. Well, thank y'all very much, and thanks everybody out there for listening. And again, go to compoundstockearnings.com, the free Cal report. Check out the website, all kinds of stuff. But the Cal report is going to be very interesting, because that's where you get people that are clients who are writing in and giving advice and everything. So thanks, everybody, and we will see everybody next week.
Have a good week, everybody.
Bye.
Happy 4th of July. Bye-bye.